Ever wonder what happens when sentiment overrides fundamentals? Well, this week you saw it in real time. Stick around. The charts tell a very different story than the headlines. Volleyed and thundered. The image of the light brigade charging into a storm of gunfire seems uncomfortably fitting for what we've just witnessed in the markets this past week. Cannon to the right of them, cannon to the left of them, cannon in front of them, volleyed and thundered. If your ears are ringing, well, good, because that means something took aim, something exploded, and you're not alone in wondering what'll be left of our once impenetrable brigade when the smoke clears. And yes, it will clear, but right now, does it feel like it? Well, if you turned on your financial news networks this week, you probably saw a stream of "I told you so" analysts, each throwing hand grenades of regret at the air. That didn't help. No one likes to hear, "See, I was right," when their portfolio is getting shot at. The question is, what exactly is going on here? Because this doesn't look like a traditional fundamental dump, not based on the metrics we've been utilizing. No, this one feels like something completely different. So in my typical way, I want to hand you information. You decide what it means. I'll show you a couple of charts, so put your glasses up and let's get going. The first chart, the single biggest sentiment driver in recent weeks, and that is the Federal Reserve and what it might do next month, or at least what investors think it might do. Logically, a 25 basis point cut in December or January should not be front and center when we're talking about how well Nvidia or Meta will do over the next 5 years. Quick answer? No, it doesn't have anything to do with it. But here we are, stuck on a rate cut addiction. Investors are wrapped up in FOMC policy meeting that's distorting reasonable facts-based decisions. I know the math behind how interest rates impact valuations, but trust me, that 25 basis point difference hardly moves the bull case for many of these tech mega caps. The chart shows December's rate cut probability almost at 100% before Jerome Powell's post-FOMC presser when he said, "It's not a given." Boom! Sentiment shifts. Odds drop. And it fell below 50%. Then minutes hit and odds dropped further. What's my guess? Well, cut prospects are kind of slim right now. I got a bonus chart. I know I said only a couple of charts, but I just simply can't resist. There was a working paper by Anna Wong, who's Bloomberg's chief U.S. economist. She and her colleagues, they wrote a paper on Fed Speak Index, the index that tracks the tone of Fed communications, dovish or hawkish. And guess what? The tone just shifted hawkish. That shift has been a clear catalyst for this week's selling. Now, another chart, the emotional heartbeat of this week. And you don't need a doctorate to understand this one. Volatility is not just spiking, it's sticky. We had a complacent market from late summer into early fall. No matter what the Fed functionaries said or which geopolitical fireworks popped, it just kept grinding up. This week, the grind stopped. Clearly, the VIX flashed higher, it plateaued, then rose again. That telltale sign? Investors are no longer shrugging off risk. They're paying attention to downside now. Fear came home to roost, and guess what? It's not leaving the porch just yet. Now, here's another chart. Played out live just yesterday. You saw it. Nvidia tossed out another blowout quarter. By any historical standard, it should have been lifting the entire tech complex. Instead, the market sold off. Every AI mega cap announced big wins weeks back. Yet, the whole AI space fell under its own weight because the macro mood essentially went sour. This is what I mean. Sentiment, especially Fed-driven, is overriding fundamentals. When fear grabs the wheel and even the best earnings can't steer the car. Let's look at this next chart. This one is of the forward PE multiples of the Mag 7, which is the red line, versus the S&P 500, which is the white line on this chart. Over the past year, you can see what it did. Is valuation really a problem just by looking at this chart? Is AI really out of control? The answer? Kind of, maybe. The Mag 7 multiple is elevated relative to the S&P 500, sure, but it's not historically off the charts. And S&P's own multiple hasn't actually exploded either. It's drifted higher as earnings grew. The translation, valuation panic is just a narrative. It's not a data point. Investors are looking at 30x forward earnings like it's a red flag, while ignoring that these companies are growing earnings 20 to 40% year over year. NVIDIA just announced 60.5% EPS growth. The real stretch? Not multiples, but how little investors seem to remember what rapid secular growth actually looks like. So, 4 charts, 1 bonus, and the reality, all are symptoms of something bigger. Sentiment deterioration plus Fed uncertainty. Powell changes the tone, rate cuts odds drop, everybody freaks out about what the Fed will do next. Add sticky volatility and a market refusing to reward great earnings. What do you get? Well, exactly the week we just went through. The charts, the sentiment shifts, the volatility, the divergence in leadership, the valuation spreads, all are the cannon blasts hitting the market from every single side. None of them individually justify a structural change in the long-term thesis for AI, for tech, or for equity markets at large. But together, in a very short window, they create confusion, discomfort, and noise. Lots of noise. And here's the thing, investors hate noise. They want certainty. The market can't offer that right now, unfortunately. When Powell shifts tone, when futures reprice, when volatility sticks, when NVIDIA smashes earnings and still gets punished, that's when even seasoned investors start hearing Tennyson's cannons again. Cannon to the right of them, cannon to the left of them, cannon in front of them, volleyed and thundered indeed. So what should you do? Do these near-term drivers warrant a longer-term pullback? I'm not going to answer that for you directly. You know my thoughts on long-term thesis investing, but I'll tell you this, the facts matter. Emotions don't. Your job as an investor is to stay focused, stay informed, keep collecting data rather than reacting to fear. The cannons may be loud right now, but the smoke always clears. The real question is, what will you choose to do while visibility is low? So your truth bomb for today is this. When volatility hits and sentiment squeezes fundamentals, the opportunity lies in remaining patient rather than panicking. If you like this kind of content, please click like and subscribe. And join me every day for Wall Street Truth Bombs, where I drop them here before the market figures them out.